Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, how to open a Fidelity solo 401k and claim $1,500 in tax credits before 2025 ends. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's get started. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So the $1,500 opportunity is an opportunity to claim $1,500 in solo 401k tax credits. Under the Secure Act, multiple tax credits were enacted by Congress to encourage small businesses to establish 401k plans. So one of those tax credits is the auto enrollment tax credit, which is available to solopreneurs, so to solo business owners that set up a solo 401k plan, like the one offered by my solo 401k financial, that includes an auto enrollment feature, as well as the required notices, etc. So these are tax credits. Specifically, they're $500 per year for 3 consecutive years, which is not a tax deduction, it's a tax credit. So it's much more valuable because it's a dollar for dollar reduction in the solopreneur's tax liability. Now, in order to be eligible, the solopreneur needs to establish a 401k plan, a solo 401k plan like the one offered by my solo 401k financial that adds an auto enrollment feature. So we automatically draft our plan documents to include the required feature, the required notice, so that the solopreneur is eligible to start claiming the credits. So as long as the solopreneur sets up a plan here before the end of 2025, so they sign up by December 31st, 2025, that'll establish the plan in 2025, and they can start claiming those $500 credits for 3 consecutive years when they file their 2025 tax return. Now, it's also important to note that this tax credit is not just available for new plans, but even existing basic plans that are upgraded to our plan will be eligible to claim the credit. Ultimately, it's a tremendous way to offset the costs. For example, even though the tax credit is not a function of the cost, it will dramatically make solo 401k plans much more affordable for solopreneurs. So, for example, our fees are $650. That's the initial fee, which includes the $525 establishment fee plus the first $125 annual fee. So, these $1,500 of solo 401k tax credits will more than cover our fees for the first 7 years. In other words, if you added up all of our fees over 7 years, it wouldn't even amount to $1,500. So the problem with Fidelity's basic solo 401k plan is that it's not going to make the self-employed business eligible to claim these credits. It's also missing a number of other features that we'll touch on here. So ultimately, the quote unquote free plan might cost the self-employed individual thousands in missed credits, as well as other features like the ability to make additional contributions, etc. So let's compare the quote unquote free plan at Fidelity to the self directed solution, such as the one offered by my solo 401k, where you can still have your accounts at Fidelity. So you can have your cake and eat it too, in the sense that you can have the fully featured plan that's eligible for the credit from my solo 401k, but have your accounts at Fidelity. So Fidelity offers their own basic plan that has a number of critical limitations. For example, it doesn't support 401k loans. Fidelity's basic plan also doesn't allow for mega backdoor Roth contributions, where you can save, for example, up to $70,000 or more for 2025 if you're age 50 or older. It doesn't allow for alternative investments. So for example, Fidelity's basic plan would not allow the self-employed individual to invest in alternative investments like real estate or crypto, such as Bitcoin. And then of course, it doesn't include the auto enrollment feature. So there's no $1,500 in solo 401k tax credits like you would obtain by setting up the plan offered by my solo 401k financial. So in contrast, the solo 401k plan offered by my solo 401k financial is a fully featured plan that puts you in control. For example, it does allow for solo 401k loans. For example, with our plan, you could borrow up to 50% of the balance, not to exceed $50,000. You'd have to pay it back in either monthly or quarterly payments, equal payments of principal and interest. Interest is either prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. And you could use the proceeds of that loan for any purpose whatsoever. For example, it could be used for a personal purpose. Mega Backdoor Roth. So the ability to make mega backdoor Roth solo 401k contributions is one of the top use cases that our clients are utilizing our solo 401k plan for. So for example, with the mega backdoor Roth, the individual can save up to $70,000 where those funds end up either in a Roth solo 401k or a Roth IRA. It's up to you for 2025. In addition, of course, our plan would allow the individual to make standard brokerage type investments. And again, the accounts can be at Fidelity, where they can invest in mutual funds, ETFs, stocks, certificates of deposit. But in addition, our plan would allow the solo 401k owner to diversify into alternative investments like real estate, cryptocurrency, precious metals, private equity, pre-IPO stock, just to name a few. And then lastly, of course, our plan will make the self-employed individual eligible to claim the $1,500 in solo 401k tax credits. That's because we draft the plan to include the auto enrollment feature. Now, as part of that auto enrollment feature, it will establish a default 3% contribution percentage. But the solo 401k participant has the option to opt out of that default 3% contribution percentage. So opting out of the default doesn't mean that the individual is no longer eligible to claim the credit. They still are. They just exercise their right to opt out of the default. The plan, of course, still has the auto enrollment feature, which means the self-employed business, the solopreneurs, still eligible to claim the credits. So opting out of the default would just simply allow the individual to make contributions in whichever percentage or schedule or amount they prefer, of course, subject to the limits and the deadlines. And then the additional reasons that clients would want to set up a plan with us is the support. So for example, once the value of the solo 401k plan exceeds $250,000, including the value of any defined benefit plan that might be sponsored by the self-employed business, there will be an informational filing requirement that applies to the solo 401k plan. The name of that informational filing requirement is the Form 5500EZ. So we handle that Form 5500EZ as an optional free service for our customers, including filing it under the electronic filing system to make it easy for the customer. Whereas if someone has a basic plan from Fidelity, Fidelity's not going to handle the 5500EZ for you. So you'd have to engage maybe your CPA or another provider, which of course is going to charge a fee to handle that 5500EZ for you. So features that standard plan lacks, some of the top ones are listed here. The mega backdoor Roth. So individuals that set up the basic plan for Fidelity are missing out on the ability to make those mega backdoor Roth contributions, which would allow them to contribute up to $70,000 for 2025, where the funds end up in a Roth account where they have the potential for tax-free growth. Alternative investments. So someone who sets up a basic plan of Fidelity is going to be limited to Fidelity's investment options. So they would lose out on the ability to diversify into true alternative investments like real estate, private equity, precious metals, cryptocurrency, and more. And then finally, if you set up a basic plan from Fidelity, you're going to miss out on the ability to take a solo 401k loan, where this would allow you to tap funds in your solo 401k and use them for any purpose. You can withdraw those funds without having to pay taxes or penalties, as long as it's properly documented as a loan, which we handle the loan documentation requirements as an optional free service for our customers, and paid back according to those loan terms, where the loan is going to need to be paid back in equal payments of principal and interest. The interest rate is prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. And this, of course, doesn't even get into the fact that our plan will make the self-employed business eligible to claim those $1,500 in solo 401k tax credits, which of course the Fidelity plan lacks. But the great news is that you can still set up the solo 401k plan through my solo 401k financial and have your accounts at Fidelity. So it's a simple 3-step process. The individual would first sign up with my solo 401k financial. We'll prepare the documents to establish your plan within the same business day when you sign up. And of course, that's going to include the auto enrollment feature to make the individual eligible to start claiming the credits. So as long as they sign up here by December 31st, they'll be able to start claiming those credits when they file their 2025 tax return next year. $500 per year for 3 consecutive years. Step 2, open accounts at Fidelity. And we're very hands-on in helping customers open up free brokerage accounts in the name of their solo 401k plan that they establish with us. So even though Fidelity offers their own basic plan that doesn't include these advanced features and doesn't make the self-employed business eligible to claim the auto enrollment tax credits, at the same time, Fidelity is still happy to open up brokerage accounts that are governed by a third-party plan. So therefore, you can have your cake and eat it too. You can have the fully featured plan documents, but still have your accounts and your investments at Fidelity. And then lastly, fund the accounts. So the accounts can be funded either by making contributions and or by rolling over funds from an eligible retirement account, such as a former employer plan or a non-Roth IRA, and then filing the Form 8881, which is the form used to claim the credits. So for all of our clients, as part of the onboarding process, we provide a deep dive webinar that we hosted with an IRS enrolled agent that goes through step by step how to complete that Form 8881. So a lot of clients will simply share that webinar with their tax advisors, so the tax advisor can be sure to file the Form 8881 and claim the credits. So the crucial 2025 year-end deadlines will, of course, be to sign up by the end of the year so that the individual can start claiming those $500 per year credits when they file their 2025 tax return. That will also lock in the ability to make all types of contributions for 2025, whether they're looking to make employee, employer, and or voluntary after tax, in other words, mega backdoor Roth contributions. So as long as they sign up by the end of the year, they'll be able to make all types of contributions by their 2025 business tax return deadline, including extension in 2026. Please note that they could also take their time to open up accounts at Fidelity sometime next year in time to make those contributions. That takes us to the end of the slides that we wanted to share today. Thank you so much for checking out today's session. If you're finding this to be helpful and more confident about your future, please take 1 second to like and subscribe. Liking will tell the platform that the content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. We also want to invite you to our community. We have the largest community of solopreneurs and solo 401k owners. With over 30,000 members, we have vibrant forums. We have a library of videos and webinars. So there's lots of ways to learn and to share the knowledge. Please don't hesitate to join. You can join quickly and easily at my solo401k.net/my community. Well, looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.